today with Trent Mell, president of PearTree's Securities. Trent, welcome back.
Thank you for having me, Angela, again.
Now, I understand we talked about last time PearTree's model with using flow-through shares financing for resource companies. Can you give us a bit of a refresher on that model?
Sure. Well, the PearTree model is really premised on tax credits that have been available in Canada for 40 years. So as a way to compensate investors for taking the risk of investing in high, earlier stage opportunities, they have an opportunity to access deductions that may never be used by the exploration company. So 40 years ago, the flow-through share regime was brought in. You and I can invest in junior exco who's drilling, and the deductions that they're incurring for that drill program can get brought into our tax returns. And so our innovation is to take those tax credits and to pair them with another bucket of tax credits that are already out there for philanthropy. So if you give money to a charity, by way of buying flow-through shares, you get twice the deductions, lower cost of giving, and invariably the charity gets more money as a result.
Mm-hmm. And those are some of the benefits for investors. Are there any other benefits that that exist?
Well, the benefit on the issuer side is typically you're seeing a better premium on your shares than you would otherwise see in the marketplace. You're attracting real stable investors. You're not getting a fund who's taking the credits and getting out, because our shares under our structure go from a donor to a charity, and the charity then sells them to a real resource investor. So you're able to then sell those shares stripped of tax credits at a discount to people who really do want to own that company. So real investors, higher premium, less dilution for existing shareholders. So it's proven to be a very good formula for the Canadian resource world.
Do you have to be a high net worth individual or an accredited investor?
Yes, all of our structure is premised on being an accredited investor. So to do so, you've got to meet the thresholds in Canada, and it implies a private placement of shares typically, which would mean 4-month hold stock as well. So you can't resell them other than to an exempt buyer for a 4-month period following the issue.
Mm-hmm. Well, Trent, in a more general sense, what commodities do you think will perform best during the next 1 to 2 years?
I was looking at that yesterday. SNL Metals and Mining came up with their Q2 report. So up until June, they were looking at the performance of commodities, and even some of the laggards like iron ore and thermal coal are starting to come back, and to the tune of 30-some%. So we've had a great run. It started with precious metals, of course, gold, and more recently silver, and now we're seeing commodities perform. So across the board, things are looking good. The exceptions, I would say, aluminum is a bit of a laggard, up 8% in the second quarter. Copper up about maybe 3%, and that would probably go to the end of July. Potash and uranium are other laggards, but if you go across the metals sector, the gains are 20% plus across the board. Personally, I still like zinc. Mm-hmm. Zinc seems to be leading the recovery on the base metal side, and that's premised on a recovery in the U.S. and some evidence of supply side surpluses. I guess inventory is being drawn down, and precious metals are high on my list. But the others are starting to gain interest. So I think you might see a broader level of interest by investors and across the spectrum as we enter the fall season.
Well, what do you look for? What sort of qualities do you look for when you're investing in resource stocks?
Well, what we see on the political landscape is as times recover, resource nationalism picks up. So you have to start with jurisdiction. Well, I suppose you start with geology. You got to know that there's something there. But once you've gotten past the opportunity to mine something, geopolitical risk is important, and hence, in part because of our product, but our focus on Canada is aided by the fact that there really is no better place in the world to invest. Once you have that in place, management can never be underestimated. Peter Monk, the founder of Barrick Gold, used to say that he would take a good team and an average asset over a good asset and an average team any day, because a bad management team can mess up a good asset, and a good management team can really make an average asset perform. So I guess those would be the 3 criteria.
Mm-hmm. What stocks do you like at this time, and why?
Yeah, so looking back at the screen, everybody's performed very well. So when I was last year, I named a few. Falco, company I used to run and still own shares in, is up 400% year to date. Now they're above average. Caminac was another one I liked, and they have since been acquired by Goldcorp for about $500 million. One of the bigger transactions over the last quarter. When I look at what else is out there, maybe this relates back to the financing that I'm seeing. The investor interest is going further downstream to earlier stage opportunities. So one company that doesn't yet have anything, but yet has a very good land package, a healthy treasury and a very good management team is Probe. Probe Mining got acquired by Goldcorp a year and a half or so ago. That same team now has been biding its time looking at some 200 opportunities around the world, and they merged a few months ago with Adventure Gold, who has primarily a Quebec-based land package. Their Val-d'Or East project is now the focus of the drill program that just started. And I think if anybody in that sort of earlier prospective stage is going to perform, I'd put my money on that team. And beyond that, Pure Gold has had a lot of luck. Their Madsen mine and the trend out there. There is a team that has a good track record as well. They're in the Red Lake district. Lots of opportunity. I've got a friend running a junior called Nighthawk in the Northwest Territories, and they have recently enjoyed a bit of market success. So it seems that the investor interest is now looking beyond maybe the obvious names from a year ago to things that haven't seen a lot of love, and everybody, the tide is lifting all boats. But again, then you got to look to the team and see where you pick.
Exactly. Thanks for coming by again, Trent.
Okay, my pleasure.
For SmallCapPower, I'm Angela Hermantis.